California housing market has officially gone negative year over year. I think it's fair to say that the crash has finally begun. I want to take a look at the data as of February 2026, the most recent update from Redfin, to see what's going on in our wonderful state. So timeline, we're going to take a look at a 3-month period from last year to this year to see what's happened year over year on the statewide level and also county by county level. We want to take a look at the 5 counties where prices have fallen the fastest, the 5 counties where prices continue to rise the highest, and then the 5 biggest counties that are responsible for a lot of the growth one way or another. So we're taking a look at the median sale price, and this is from Redfin, but compiled by yours truly at the California Housing Collective. If you'd like to join, if you'd like to learn more, just please drop a comment below. I'd love to get in contact and reach out to you. So let's take a look at the overview for the California counties. Of the 58 counties in the state of California, 38 declined in value year over year. So it's well over 50% of the California counties are now in decline year over year, with only 20 increasing in value. We're going to take a look at what the statewide averages look like at the end. But first, we're going to take a look at the bottom 5. These are the 5 counties where prices are falling the fastest year over year. Starting off with number 5, we got Butte County up in, I think that's Superior, California, at a minus 5.74% median price, dropping from 418 down to 394,000 in 1 year. Inventory has actually dropped. So usually what you see is the inverse. Inventory goes up, prices come down. In this case, for Butte County, what you're seeing is prices are going down while inventory is going down. That price must be getting a little bit more attractive because you're seeing the percentage of homes sold jumping by 13 points. So from 118 to 133. So Butte County coming in at number 5, the 5th fastest falling county in the state of California. Number 4 is beautiful Napa County. So minus 5.89% in 1 year, from 958 down to 902. This is a more traditional data set. So you're seeing the inventory start to increase 3.92, almost 4%. And typically as inventory goes up, pricing will inevitably come down, but it probably hasn't come down far enough yet because the amount of homes that are being sold is still falling a little bit more. So about 4% drop from 71 down to 69. Coming in at number 3 is Lake County. Lake County is a pretty big jump, down 8.29% year over year. And I love looking at these prices in parts of California where it's down to 322,000 median sale price. For myself, living down here in beautiful Orange County, California, I can't really get anything. Well, no, you can't get anything for 322,000. But Lake prices continue to fall as inventory rises, and you're seeing the percentage of homes sold about even. So from 51 to 52, so stay about even there. Number 2, Mendocino County. As you see, we're right in the same area. We've had a lot here in Northern California. This is almost a 9% drop from about 544 to under $500,000. The median sale price in Mendocino County. Inventory has dropped a little bit, and with that price becoming more attractive, you're seeing the amount of homes sold start to jump. So a 14% year over year increase in the amount of homes sold as prices fall. Now coming in at number 1, the county where prices are falling the fastest, Santa Barbara. This is a dramatic drop. 11.31% in 1 year is astounding. So went from over 1.1 million to just a hair over $1 million for the median sale price. Inventory is climbing, up 8% year over year, and the amount of homes sold is climbing 5%. So this is typically what you normally see in the data set where inventory rises and prices fall. And as a result, there's more activity. But if you are in the Santa Barbara area, this could be really good news or bad news, depending on your perspective. If you're looking to buy a home, either as an investor or a potential owner-occupied homeowner, this is awesome. So you're seeing more houses on the market, more activity, and the prices are coming down. If you're looking to sell your house, this might be an opportune time to get out now, because at this rate, with more competition on the market and even with more homes being sold, prices are dropping. So number 1 fastest falling county in the state of California is Santa Barbara. Now I want to take a look at the top 5 counties where prices are still rising the fastest. This is right in that same general area where we saw Lake and Mendocino, but now we're going to San Francisco County. So an astonishing 4% median price increase isn't that crazy, but going from 1,343 to almost 1.4 million is a pretty, I don't know, just prices in San Francisco are wild. The inventory, this is a few months in a row where it's just been a gigantic drop in inventory, which is driving prices higher, minus 25, almost 26% available homes. So from 1,400 homes available on a given month down to 1,000 this year. It's a remarkable drop. And with median prices going up, you're seeing the activity stay about even, so down 1% year over year. But San Francisco prices are nudging higher with inventory falling off a cliff. Speaking of, Santa Cruz, right in our same neck of the woods. So you have coastal California and then Bay Area California, but right in that same area. Santa Cruz is up 5% in median price from a little under 1.1 million to a little bit over 1.1 million, with a similar massive decrease in the amount of homes that are available, almost a 22% drop year over year from 548 houses available in a given month down to 428. What you're seeing is even with that median price nudging higher, you're still seeing more homes being sold as well. So a little bit of an unusual data set for San Francisco and for Santa Cruz. It's a fascinating market to watch in the Central Coast and the Bay Area. Number 3 on our list is Sutter. So Sutter is a 5.52% median price jump. So from 426 up to 449. We're seeing a very strong inventory growth, up 11.58%, and the amount of homes that are being sold down 11%. This is an atypical data set. Prices are rising while inventory is rising. That typically doesn't happen, but as prices rise, typically the amount of activity and the demand drops, which is what you're seeing. So number 3 is Sutter County, continuing its strong growth year over year into 2026. Also in Northern California, you have El Dorado coming in at number 2 on the list at 5.72% median price growth from 647 to 684. Inventory is down a little bit. The amount of homes sold is perfectly even in that 3-month period year over year from 169 to 169. So El Dorado coming in at number 2, strongest growth year over year. The number 1, as far down south and as far east as you can get in California, is Imperial County, the highest growing year over year in terms of median price in California. So from 364 to 397, that's a 9.02% jump. Inventory is still climbing a little bit, up 3%, but the amount of homes sold has actually dropped pretty significantly, down almost 15% year over year. So it seems like that median price is continuing to move north, even as inventory is going up. But there's just not as much activity at that higher price points, even though it's still a shade under $400,000, which is hard to find down here in Southern California. But there's just not enough people who are able to meet that price point, which is why you're seeing that inventory or the amount of homes sold continuing to fall from 47 to 40, almost that 15% drop. Now I want to take a look at the big 5. So these are the 5 that are most responsible for California's overall trends, because these are the 5 biggest counties in terms of available homes and the ones that really drive the market here. So coming in at number 5, Orange County, where I live, continues its slow and steady march up. So Orange County has not really gone negative in a long time, but it also is not seeing any consistently strong growth either. So Orange County is coming in at a 0.68% growth from 1.177 to 1.185. Inventory is falling, and the amount of homes that are being sold are falling as well. So pretty typical data set down here for Orange County, but one of the main drivers for California, a little bit of growth while inventory goes down and activity goes down. Number 4, San Diego. You'll notice the trend. The biggest counties in California are all right down here. But San Diego County is up 1% year over year, almost at $900,000 now for the year. Available homes is almost exactly even, which is funny at that amount. It's gone up 1 more home month over month or year over year for this 3-month period. While the amount of homes that are being sold has dropped a little bit, about a quarter of a point. Number 3 is San Bernardino. This is a tougher market if you are a professional in the California housing industry. Prices are going down. Inventory is going down 7%. And the amount of homes sold is down about 1%. So it's just all red all the way across the board. It's a tough market if you're looking to buy. It's also a tough market if you're a contractor, an agent, a broker, a lender. If you are in this market, prices are going down, inventory is going down, and activity is going down. And the 3rd largest market in California. Number 2, right next door, or I guess right down south, Riverside County. These 2 make up what's proverbially known as the IE. It's bad in both parts of the IE. So you've got Riverside down 1% year over year from 610 to 603. Inventory is down 4%, and the amount of homes sold is negative 1%. Now, one of the things that I would like to note here is your strongest growth year over year is right here in Imperial County, whereas these 2 counties north both have fallen about 1% year over year. So there's something about this Imperial County data set that is still strong year over year, while it's two neighbors to the north have been struggling a bit. Now let's go to number one. By far and away is LA County. So LA County is massive, both in terms of area, but also in terms of the amount of homes. So, and it's leading the market downward. So as LA County goes, the rest of the state tends to go as well. Los Angeles County is down 1.22% year over year, from a little bit over 900,000 to a little bit under 900,000. Available homes has gone up just a fraction, from 19,238 to 19,314. While the activity has gone down a little bit, so minus 3%. So you're seeing prices fall and activity fall, while inventory continues to inch up a little bit. And you'll see that these numbers look pretty similar to what the state looks like overall. Now, looking at this on a statewide level, this is why we are making the argument that the crash has begun. I feel like 10 to 12 months ago, we had pretty strong growth from 4 to 5.5%, which is very strong considering a normal real estate market. You'd see appreciation between 3 to 5%. But look at these past 9 months: less than 1%, up less than 1%, down 1%, up 1%, 1.2, 1.3, 1.2, less than 1, and now negative again. This is typically what happens as you're going up this roller coaster and you start to crest. You see slow in growth until it eventually starts to go negative. What I would expect over these next few months is it's probably about 50-50. So we're up less than 1%, down 1%, up less than 1%, down 1%, until the year-over-year crash starts to happen more dramatically. So we'll continue reporting on this month over month just to take a look at how California's housing market is doing as a whole. We have officially gone negative, and I have a feeling we're going to continue to do so. Here's a fascinating one. If you look at the available homes, inventory was skyrocketing a year ago. So up 30% year-over-year growth in inventory. It's massive. And as you see this trend line, as it's going down, the year-over-year numbers have been dwindling until this month. This is the first time in years that the California inventory has gone negative year over year. If this continues to happen, there's going to put a cap on how fast the median price can continue to come down. But I have a feeling as this market picks up over the next few months, we're going to see inventory continue to push north. Not only we're going to get anywhere close to these 30 to 33% numbers again. Just don't think we are at a point in our housing market where we can experience that type of inventory growth unless the government starts to incentivize landlords to get rid of their properties, but I don't think that's happening. So I'd expect this number to moderate in being plus minus 5%, while this starts to go negative as well. Then if you look at the amount of homes sold, there really hasn't been much change year over year. So up a couple of percentage points, down a couple of percentage points. It's mostly held even. We're at an equilibrium point as of now, ladies and gentlemen. So when a market is at equilibrium, prices can move up and can move down a little bit, but the activity is holding steady. This is where I see us at that crest where we haven't really, or we're not going to skyrocket up. We're not going to all of a sudden crash overnight where we're going to be 10% down year over year. But I do think this is the beginning of the inevitable crash that needs to happen in the state of California. We are on record saying that it should be about a 30% drop from peak to trough by the time we hit 2030. So price target is around $700,000 for the median sale price in California by 2030. We're still in the high 900s right now, so expect this to continue to fall. As it continues to fall, you will see inventory rise, and you'll see the amount of homes sold start to rise as well. So this crash that is coming, this 30% drop, is good news. I promise you, if you are a prospective homeowner or if you are a current homeowner, if your equity comes down, don't worry. If you need to sell your property, all the other properties that you compare yours against are going to be coming down as well. So you are protected. If you're looking to get into the market, it's going to be much better. Don't buy anything right now because prices will be coming down. And if you are a fellow California housing professional, you should be rejoicing. As prices go down and inventory goes up, the amount of homes sold is going to go up as well, which just means there's going to be more business for contractors like myself, but also real estate agents, lenders, brokers. So it's good news for all of us if you care about the California housing industry like I obviously do. If you have any questions, please drop a comment. If you want to connect, please drop a comment as well. We're looking to grow our California Housing Collective, so looking to just connect with more of you who care about the California housing industry, especially if you work somewhere in the California housing industry. Please drop a line, say hello. My name is Nathan. Love doing this. See you in the next one.